All right, so good morning, everybody. It's actually afternoon for me for once. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. How are you? What's your name? I'm a currency trader. Been doing this for a very long time, and I'm here to share my experiences with you. An overriding goal of helping you become a successful Forex trader. Do these sessions every single day, Monday through Thursday here at Forex.today, every Friday at FX Street, where I'm also Forex Speaker of the Year. These sessions are at 7:30 in the morning, New York time, which is approximately London lunch. And I think today is going to be a radio show, so maybe I have my radio voice on. Welcome to Forex.today. Does that sound pretty good? So I'm in Africa, and I guess hotels in Africa have pretty lame internet connection. So it's slow as molasses on a cold Georgia morning, and it's having trouble doing everything. I got it finally running, except it won't load the charts. Probably too much information for them. So I do apologize for that. But we'll try our best. How does that sound? Do you mind if this is a radio show? I say look at this and you look at that on your own computer? Yeah, any other suggestions? No? So I was ready, I was prepared. Just these things happen when you travel, so I do thank you for your patience. All right, so yeah, there's big news coming out today. It has to do with OPEC, and there are rumors on the street that OPEC's producing more oil, and specifically Saudi Arabia is producing more oil now than ever before. Well, that can't be good for oil, right? Also, if you look at the history of things, I mean, oil prices will come down. If you look at the history of what's been going on recently, the United States has also been producing more oil. I think Iran will produce as much oil as they possibly can. I think Venezuela will produce as much oil as they possibly can. And I think Canada wants to get Alberta fully back online. Remember, they had those horrible fires not too long ago, and I don't know if they're back up to full production, but that was 1 million barrels a day. And so anyways, the US dollar is weak today. Dollar off, right? Risk off, I guess, if you want to call it that. But anyway, so the US dollar is coming down, and traditionally you would look at commodities and you'd immediately buy commodities or maybe commodity currencies. That's just standard operating procedure. Why would that be the case? Why would you see weak dollar? And why would why would you buy commodities if you saw a weak dollar? No, I don't know if my chat is slowed down, so I guess I'll just answer that. Oh, there we go. Some commodities are pegged to no, they're priced. They're priced in dollars. Okay, so when South Africa pulls gold out of their ground and sells it to China, it's done in dollars. Nice. Okay. So anyways, oil is also priced in dollars, but there's too much oil. There's just not enough demand, supply is increased, and prices fall. So it's probably going to be like that for a while until we get an increase in demand. But I don't see that really spiking anytime soon. Like, what, in the next 2 months, do you think demand will significantly increase globally? Okay. No, probably not, right? But anyway, so oil would be something that you looked at, but I think other commodities are likely to go up, just not oil, and that has to do with the supply issue. So if copper is priced in dollars, copper should go up. What's the anti-US dollar? Gold. And how is gold doing today? So without even thinking about it, or without even opening a gold chart, one would assume that gold would be going up. There is a relationship, obviously, a correlated relationship, because gold is priced in dollars. So if dollar is weak, then you need more dollars to buy the same amount of gold as yesterday. But there's also a causational relationship, because a lot of people will buy gold because the dollar is falling. Okay? So so it should be exaggerated. So really what I would do if I were me is I would look for support, and I'd look for opportunities to buy a dip. Did you guys trade gold today? I don't have pivot points on my chart, but I could see that we were on support not long ago. And we're up at resistance right now in a zone in which a bear would probably consider selling. So I don't know what's going to happen in New York, but if you're a dollar bull, you got to be careful now. FX Ambassador brings up the liquidity issue, and that's it's presumed, right, that many European and I guess even American trading desks are on vacation. Have we had any recent evidence of that is actually the case? I mean, we assume that, but let's verify that. Has anything happened recently where you'd scratch your head and say, that must be the illiquidity of the market? Anything, guys? Anything? Did anything happen yesterday that would be assumed to prove, reasonable proof, that the market is illiquid? How about this? If you don't know, type in a question mark. Thank you, Paulie. Paulie's right. So, Mark Carney at the Bank of England started his plan to, save the United Kingdom. Which ain't a bad plan for a Canadian, eh? And they went out to buy long-term bonds. This is 15-year, 20-year, 30-year bonds. And there were not enough. So when the United States issues a bond, let's say, they issue it into the primary market, and there's at least 14 people that want to buy a bond from the government for every one bond that is actually sold. They could have sold every bond 14 times more. Isn't that amazing? Carney, however, isn't going into the primary market because he's buying. He's not issuing. And he needs to buy other people's bonds. Isn't that interesting? The thing is, he couldn't find enough. He bought them all, and he needed to buy more. So, either he wasn't offering a high enough price, or there were just simply not market participants that were around to sell their bonds. They were on vacation, right? And they were not around to actually sell them. Isn't that interesting? I don't think Carney was out lowballing everybody, right? So then maybe the market is simply illiquid. There are just not enough market participants. There were not enough sellers. So there you go, eh? So dollar going down, gold going up. What else should you be looking at? Talk to me, Goose. Hmm? Well, I would start with commodity currencies. What should you look at? Okay, so let's go through this. Kiwi dollar is up. Thank you, Hans. Yeah, Hans, are they cutting in your opinion? Kiwi yen I looked at yesterday, and it had some resistance in there, in which might be some good sell zones. Yeah. Well, here's one thing to think of, and I don't know if it's in the news because I haven't even seen the news in a week, but um, it's assumed recently, not verified, just assumed that the Reserve Bank of Australia is done cutting interest rates. So that's the floor. Aussie dollar potentially could go up for the next 5 years. Or at least not go down. That's what a floor is, right? So does New Zealand want to keep cutting if Australia is done? That's the big question mark, right? So if I were me, what I would do is I'd identify a few levels of support if I was thinking about buying on a dip. That sounds pretty crazy though, right? So therefore, I would identify one or two levels of resistance in which I may want to sell. The interesting thing is those resistance levels become support levels when you break if they don't cut. And it jumps, then it may come back and use those levels of resistance as new levels of support. Capiche? Peter, just remember that's based on all known information and you're about to learn new information. But yes, duly noted. Thank you, sir. Well, don't get too far into, perhaps we can get this, maybe that will happen. All of a sudden we're throwing in these random variables. You need to be a Buddhist and just say there only is. And then you'll get a good trend, and then the trend will destroy itself. Okay. Zelda, I was talking about role reversals. It's assumed, or I think a lot of market participants believe the New Zealanders are going to cut interest rates. So therefore, you want to sell at resistance because that would be bearish news. Okay, so you want to identify a couple of levels of resistance. But I have a feeling if you haven't created that plan yet now, anyways, you're not going to be ready. But if you do get to those zones, you might want to pull the trigger. But there might not be enough room for a stop. Okay, but you still, if you're a bear, you need to identify levels of resistance. It's your job. That's all. But what if they don't cut interest rates? And there's a reasonable chance of that too. Well, then it would spike, wouldn't it? That means go up quickly, right? Up through those levels of resistance, which you just drew. So now you wait for a pullback, and those levels of resistance are now levels of support. So that's just one thought. So I see Kiwi yen up right now. I see CAD yen sideways. I see Aussie yen up. So I think generally yen is kind of either weak or neutral. I'm thinking a little bit weak because the Canadian dollar, I'm also going to assume, is not benefiting from the world drowning in oil. Okay? Is that a fair assumption for the Canadian dollar and for the Japanese yen? Then what in the world is going on with the pound? Pound's in trouble, eh? So Marina must be making a fortune today selling the pound into the ground. Yeah, that's not a lot of rand though, hey, Marina? One thing about rand, as soon as you have 1 million, or 1 trillion as you say, you could probably use 2 or 3 trillion, right? Oh, well, good. Excellent, good job. Okay, so yeah, so the British pound is very weak. Aussie and Kiwi seem to be reasonably correlated. Aussie doesn't have the same event risk as the Kiwi, so you might want to keep that in mind. But there could be some very interesting action on that Kiwi. So we got dollar weak. I would call your yen sort of neutral. So are you guys focusing on the British pound today? Are you done? You think it's already moved its average daily range, so there's not much to do? What's on your mind? How are you going to trade this? I can't see this right now, but I wouldn't be shocked. I can't see the chat right now, but Marina's probably what, pound Aussie, Kiwi? Yeah. But you know, it's the process All right, I think I'm back. Are you sure you want to close it? I think I'm back. Internet went down again. Nice. So this is pretty. All right. Anyways, it's too bad that I've had these problems. I think hopefully tomorrow I'll spend an hour or two trying to figure this out and see if we can get a little bit better today. Maybe they put me on the scumbag internet connection, right? So I'll go sweeten somebody up. So yeah. Anyway, so why don't I pull the plug because this is frustrating for you and frustrating for me. But I do thank you for your patience, and even though this is probably frustrating for you, um, I made the effort to be here today, and it was difficult, and I gave a few things up, and I hope you appreciate that, even though it ended up being pretty much for naught. I do watch the markets, I do pay attention, I do try to be a positive part of your life, so. So thank you anyways. Thank you very much, okay? I will be here tomorrow. On Friday, I will not be at FX Street. I'm having tea with the Queen of England. But, she might have to go to the Duke of Windsor's funeral, so that's up in the air, you know? So anyways, take care of yourself, and I'll see you tomorrow. And hopefully we got better luck, huh? Chop chop. Jumbo. Marina, did I get that one right? Chop chop. Oh, sharp sharp. Sorry. Yeah, yeah, sharp sharp. things things a Canadian boy can learn in South Africa, huh?